What is up, you guys? Welcome back to the Handmade Business Secrets podcast and the YouTube channel. I want to walk you through in today's episode some incredible tax-saving tips for woodworkers and handmade business owners. So let's dive in. Well, hey, welcome back to the show. As always, so grateful for your time and your attention. In today's episode, I want to dive straight into some tax-saving tips for you inside of your business. Now, this is one of those things that a lot of people, they start their business, they don't think anything about, and then it comes tax time. If they have any success, they get hit with a giant tax bill. So I'm going to show you how to avoid that, or avoid a lot of it as you start growing your business. Now, there are so many legal ways to restructure your finances and restructure the finances of your business in a way that it's going to lower your tax liability a ton. And I want to just walk you through some really practical write-offs that you have access to inside of your business right now today that can save you a ton of money on your taxes, or even show up to the point where you showing a loss on your taxes and actually getting money back. Okay, so I want to talk about some of these common write-offs. Now, the first thing that I want to just start off with is just giving you a basic overview of how taxes work, right? And so you are not taxed on the gross income of your business. Let's say you have a business that does $500,000 a year in top line revenue. You're not taxed on that. What you're taxed on is what your net profits show to be. So if your net profits show to be $100,000, you're going to be taxed on that $100,000. If your net profits show to be $50,000, you're going to be taxed on that. And again, you're responsible for paying the taxes of the business entity, okay? So you have your personal income and then you have your business income. If you only run a business, then it's all kind of the same. But like for me, for example, I have a W-2 job. I'm a full-time pastor. I have a W-2 job. I have multiple business entities. And so you need to be aware of how that all works. Now, most people, they pay for all their personal things through their personal finances, and then they only pay for strictly business expenses as they deem them out of their business. Now, I want to show you how you can intertwine these two to lower what you show as income and also to lower what your business shows as net income, which means ultimately you're paying less personal taxes and your business is responsible for less taxes on that net income. So here are some common write-offs. So number one is your vehicle. Now, if your vehicle is being used for business purposes, you can write that off. Now, what do I mean when I say write that off? Let's say you have a truck and your payment's $500 a month. If you're paying that $500 a month truck payment through your personal finances, you can't write that off. So there's a couple different ways that you can do this. So number one, you can write off mileage. And so you track your mileage. Any mileage that is associated with your business, you can write that off. I don't know exactly. You'll have to check with the government on this one, but I think you can write off like 60 cents per mile. If you're doing deliveries in your truck, if you're running to the store and back, if you're doing those sorts of things, you can write that off, okay? Or you can write off the cost of the vehicle. So payment plus any maintenance on the vehicle, any type of outfitting that you have to do on the vehicle, you can write that off as well. But once you pick one with the vehicle that you have, I believe you have to stick with it throughout the life of the vehicle. So what I do is I don't pay for my truck payment personally. My business, Iron by Iron Woodworks, pays my truck payment. And so that truck payment lowers the net income of the business, and instead of having to pay me that money and that being after tax income, I just don't get paid that money personally out of the business. So I show that I make less money out of the business, but I have these things that serve the business and serve me personally being covered, paid for out of the business. Okay, so that's the first one. Second one is depreciation on equipment. Now, if you have any type of equipment that you have spent a pretty penny on, table saws, band saws, planers, if you have high-end expensive equipment that you need to do what you do, you can write that off and set that up on a depreciation schedule, which means the government looks at it and says, listen, this thing is going to get worn out over time, and so we want to help you out, and you're going to have to fix it, you're going to have to do these things, or you're going to have to buy another one in 7 years or 10 years or whatever. So we want to set this up on a depreciation schedule. Visit with your accountant, visit with a tax professional on that term. I don't know that term exactly, to be honest with you. Disclaimer, if I haven't told you yet, I'm not a tax expert. I'm not a CPA. This is not financial advice. This is just to help you kind of get some bearings on some basic write-offs that you have inside your business, okay? So you can write off equipment over time. Number three, shop space. So if you rent anywhere, you can write off your rent expenses. That's kind of a no-brainer. But to even take that a step further, if you own the building that you run your shop out of, you can get set up on either a 27.5-year depreciation schedule on the building or a 40-year depreciation schedule on the building if it's classified as a commercial building. What that's going to allow you to do is, let's say that you have a $200,000 building that you're operating out of. Well, that $200,000 building, you can divide that by 27.5, whatever that number ends up being. You can take that off of your tax liability every year. That's depreciation on the asset of the building. Another one is your phone bill. Okay, so if you use your phone for business, you can have your business pay for your phone, again, lowering your net income showings on the business. Again, you're not having to pay yourself that money, and so you're showing less income personally as well. The next one is internet. If you have internet services at your house or at your office, you can write all that off inside of your business. The next one is any travel that you do that has anything to do with business, okay? So if you travel to go to a conference or a seminar, or you travel to go bid a big job, or you travel to go meet with somebody that could be a potential business partner or can help you with your business in some way, any travel, plane tickets, rental cars, lodging, anything that has anything to do with business at all, aka if you mention the word business on the trip, it can be written off as a business expense, as a business trip. Any meals that you sit down and you discuss business over that meal, you can write off, I believe, 50% of that meal as a business expense. The next one is what we call the Augusta Rule. It's not what we call, it's what the government calls the Augusta Rule. And you can essentially rent your home to your business entity once a year. Let's say that you wanted to hold a meeting with all your staff at your house, or you wanted to hold some type of mastermind, or you wanted to do something like that inside your home. You can write off what you would charge, what a normal home would rent for like that to a business. That could be $1,000, $2,000 a night. Let's say you had a 3-day meeting or a 3-day getaway or whatever. You can rent that to your business and write that off. And then lastly, and I'm sure there are a ton more, and I'm actually about to do a deep dive, do a lot of research on this so I can get all this to the people inside of the Woodworking Business Accelerator program that I host. But if you have any children, you can pay your children up to $12,000 per year as a tax write-off. I think you have to set this up. I'm working on doing this right now inside of my businesses. I don't have a ton of information on it, but I do know that you can pay your children up to $12,000, each child up to $12,000 per year out of your business. And again, that's going to lower your tax burden. So what you can do is, let's say that you normally pay yourself $100,000, but you have 3 kids. Well, you should pay yourself $64,000 and pay each of your kids $12,000, put them in individual accounts, but you can save that money for the kids, or you can utilize that money too, I believe. So if you implement all these things across your business, you should be able to figure out how to show very minimal income, unless you're an absolute monster just crushing it, right? But you should be able to figure out how to show very minimal income inside of your business over time. And the beauty of this, you pay less taxes. Listen, if you can keep money or give it to Uncle Sam, I suggest that you keep money. If you can keep money for your family or give it to Uncle Sam, I suggest that you keep that money for your family. If you can reinvest that money back into your business as opposed to paying it to Uncle Sam, I would suggest that you reinvest that money back into your business. Everybody, once you start making some money, you're going to have a tax liability if you don't know what to do with it. Here's the deal. You're going to be way more efficient with your money than the government is. You're going to do a way better job of managing it than the government does. And so I would just encourage you to check these things out. There's tons of resources that you can go to learn more about this. I wanted to give you a quick overview, especially for woodworkers, handmade business owners, of how to save money on your taxes. This is how you do it, is you lower the net income of the business, you lower your personal net income by not paying yourself to pay out all your personal expenses, but anything that is personal that also might involve your business, phone, internet, vehicle insurance, those sorts of things, we're going to now pay for those out of the business entity because they are serving the business. So it's going to lower that income, it's going to lower your personal income. So if you're watching this, you want to check out some more of the videos, I would love for you to check that out. Subscribe, be a part of the channel. A couple free resources for you. Number one, we've got our Handmade Business Secrets ebook. You should check that out. It's about 90 pages long. It is incredibly helpful. There's been hundreds and hundreds of woodworkers, handmade business owners that have downloaded that, checked it out. I've gotten a ton of positive feedback, and it's completely free. I encourage you to check it out. Number two, if you are ready to take your handmade business to the next level, you should check out the Handmade Hero Academy. This is packed full of all the business principles that I use to really get above that $10,000 to $15,000 per month mark, and I'm going to be giving it to you. Okay, it's $47 a month for 12 months with a full money back guarantee. It's worth the money. We've got, I think, 40 or 50 people inside that program right now, and we're getting incredible feedback on that. It's really helping people take the next step inside their business. And then lastly, if you are a woodworker that's looking to scale to $20,000, $30,000, $40,000, $50,000 per month, I would encourage you to check out the Woodworking Business Accelerator program. We're going to help you do that inside of there. We've got over 22 people inside the program at the moment, and would love for you to be number 23. And so with that being said, guys, love you. Talk to you on the next one.